Good morning and welcome to this Monday, December 2nd edition of Trading Places Live at EarningsBeats.com. I'm Tom Bowley, Chief Market Strategist here at EarningsBeats.com, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Before I get started here today, I do want to just talk about a couple things very quickly. First, I want to make sure that everyone is aware of the Market Vision 2020 newsletter. We've been talking a lot about it here over the last couple of weeks. It is only 1 month away. It's kind of hard to believe that we're into December now, only a month away from the beginning of the year. But you can sign up for free at our website. Just go right in there. Aaron Weber is actually giving you some instructions there, but you go right into that Market Vision 2020 tab. It brings you to this page. You can just simply sign up, your name, email address, submit, and you are good to go. What this will get you is obviously updates on the conference, but it also makes you eligible for our mini series events. I had one on Friday talking about basically setting up a winning portfolio. Talked a lot about EarningsBeats and what we do, and really what these conferences or these mini series events are for is to help you get to know the speakers before we actually have our conference on Saturday, January 4th. Also, once you have signed up for the newsletter, you'll be eligible for giveaways. We have 4 quarterly giveaways that will be announced tomorrow. And you do need to, in order to be eligible for that giveaway, you do need to fill out the poll. So there is a poll that you will want to complete. It's very simple. For me, and for instance, large caps versus small caps, which one will outperform in 2020? Then on number 2, you just go down and say, yes, I want to be entered in the giveaway. And then if you say yes, just give us some basic information. And unless you object, if you win, we'll just put your first name, last initial, and essentially your location and announce that in the newsletter. So you do want to make sure that you're signed up for the Market Vision 2020 newsletter to be able to do these polls, to be able to be eligible for the mini series, the giveaways, and to receive updates on the conference. So it's really important. One final thing about this conference is that we are extending the Black Friday special. We had one over the weekend. It was very popular. We got a big response. We want to give everybody, I know there are a lot of people traveling, maybe back to work today, back home, checking emails and things. So we wanted to extend it one more day through Cyber Monday. So you've got one more chance to get in at the best price possible. And I also want to point out that if you are not currently a member at EarningsBeats, I can't stress this enough, if you sign up for a $7 trial, you'll get 20 off on the conference by being an EarningsBeats member. So it only takes a trial subscription. So give us a shot. For $7, you'll get our service for 30 days, and that will then reduce, if you come to this conference, it'll reduce your registration fee by $20. All right, we've got a lot to go over today, so let's jump into it. First of all, I mean, it was a little bit of selling. I mean, I don't know, we haven't really been used to that lately, kind of different, but here you can see the Dow Jones was down over 100 points on Friday. Actually, it's kind of unusual. Usually the Friday after Thanksgiving is a pretty decent day historically. But we had been running up quite a bit. You can see it was on very light volume, which is typical for the Friday after Thanksgiving holiday. Really nothing bad technically took place, but you can see all the major indices were down on Friday. And it looks like ranging anywhere from about 0.4% up to 0.65%. On the small cap index. I'm going to be talking about small caps quite a bit today. 10-year Treasury yield. This was as of about 3 or 4 minutes ago, but having a pretty nice day in terms of the yield, meaning Treasury bonds are selling off. But the 10-year Treasury yield is up 6 basis points. And if you follow a lot of my work and my shows and all of my articles and the things I write at EarningsBeats and so forth, you know that I'm bullish when the 10-year Treasury yield is rising. And you can see since September, move up, higher low, put in a higher high, and these little pullbacks have been higher lows. And now it looks like we're breaking back to the upside again. This is an indication, you know, some might say, well, from a common sense standpoint, this doesn't make sense. Interest rates are going up. That's going to hurt the economy. Well, yes and no. I mean, we're near historic lows. Rates are not high. So if we go up a little bit from these levels, this certainly is not going to be, this shouldn't be something that would kill a period of economic growth. So I think that's, we need to keep all of that in mind. But if we break out, what's really happening that you need to pay attention to is that money is going out of treasuries, and that money normally finds its way into equities. So anytime you get short-term pops in the 10-year treasury yield, it generally means the stock market is going to go higher, or it is going higher. And if you look back to the low we printed back in early October, this move over that month, take a look at the major indices. The Dow going up, the S&P going up, NASDAQ. I mean, all of our major indices going up. The thing that I find very bullish is that when we do pull back in the 10-year treasury yield, meaning money does rotate back into treasuries, it's not coming out of the stock market. It's money coming off the sidelines. And how do I know that? Well, when the 10-year treasury yield went down in November, the stock market kept going up. That's how you know. If you go back and you study history and you look at 2007 to 2009, when we got drops in the 10-year treasury yield, we got crushed in the equity markets. That is not happening right now, and this aligns beautifully with the secular bull market theory. I continue to believe the next decade is going to be very strong. With pullbacks along the way, of course, and there may even be a recession or two in there, cyclical bear market, 20% drop here or there, but I think the overall market is going to do very well in 2020, well, from 2020 through 2030. On Friday, Staples leading the action along with utilities. That's not unusual when the market gets hit to the downside. Usually we see relative strength in the defensive sectors, and that's what we saw on Friday. One group that also performed well and that typically performs well when the market is weak is the mining area, gold mining. Problem I have here is that since the stock market's been rising the last few months, notice gold mining's been trending lower. I think the market breaks out to the upside, continues pushing higher, and I do not like gold mining going forward. I don't think this is an area you want to be in, not if you're into the secular bull market theory. I think that the S&P 500 will wildly outperform gold mining in those types of areas. All right, energy, rough day on Friday. You can see energy's rolled over. I still think we're in an uptrend here. Really want to see crude oil bounce off this $55 area. I know this morning when I looked, it was up $1, so it's back up over $56. Haven't looked maybe in about 30 minutes or so, but that's what we want to see. We want to see the crude oil price turn back higher and take energy with it. All right, I mentioned the 10-year treasury yield. Let's go ahead and pull up, get a more updated number here. Yeah, 6.5 basis points, 1.84. If you're bullish U.S. equities, you want to see this moving back up above 1.95%. Again, rotation. It's not just good news. It's also money, the money flow of new money coming in and the rotation out of defensive areas. That's what sends the stock market higher. This is good news. We bottomed back down around 174. Now we've come back up about 10 basis points off that low, and looks like we've broken out of this congestion area, moving back to the top side. I think we're going to run for 195. All right, now a couple of other areas. When the market, if you're bullish and you believe in this secular bull market, there are generally a couple of areas that help lead the market to the upside. One is transports. We did move above 11,200 in November, which you can see was a 52-week high. We pulled back. We've been putting in the higher lows. I think we're starting to trend higher again. I think it's also helpful that the 10-year treasury yield's rising. I expect that we'll see money move back into transports. Watch for that. Maybe the biggest theme for me in December is the small cap index. I had a blog article I'll show you in a minute, but I just wrote a blog article in my Trading Places blog talking about the small cap area and the fact that this is a group that loves the month of December historically. I actually, the seasonality on stock charts goes back 20 years. I have a spreadsheet on the Russell 2000 that goes back 32 years to 1987. And of the last 32 years, small caps have risen in December 26 of those 32 years. Now, recency bias is to the downside. 3 of the last 4 years, small caps have gone lower. And of course, right here, you can see December last year. Of course, everything got hit. But small caps took a pretty big hit to the tune of about 12% in December of last year. But having said all that, and even withstanding all of that the last few years, this is still a very, very good month for small caps. And if you look, the big selling that kicked in the fourth quarter of last year, the reaction high, we never got back up above 1,000. And I've had questions, what do you mean by reaction high? Off of a downtrend, where do you go when you bounce? So you bounce back up, you react back to the upside, cannot get through 1,000. We do it again in November, can't get through 1,000. Can't get through actually 980 in December. And then we're up around 990 in February, 990 in May, 980 in September, 995 in November. And then finally we touched and went above 1,000. So when you look at all of these tops and then you see a breakout, that to me is signaling that we're probably going higher. Again, no guarantees, but I think we go higher. And I think small caps are going to begin to lead. Look at a couple of other charts here. So here's the IWM. This is an ETF that tracks the Russell 2000, which is a small cap index. And you can see here clearly the breakout off of the downtrend. Look at the reaction highs up here around 160, 157.5. This is one of the charts that I put in my blog article this morning. But you got the break, or well, you got the test of 160, hold the 20-day, and then break out. If you notice these prior moves to the upside, we get up here and we don't hold the 20-day going back down. So we're not showing a sign of a trending market. This time we hit 160, held the 20-day, and broke out. I think we're going to make a run for this 170 level. Full disclosure, I do own IWM shares. All right, IWM versus SPY. Now, you go through periods where different areas of the market simply lead and are more attractive to investors. So this is an IWM to SPDR ratio. So IWM colon SPY. And it simply tells us which area of the market is leading. And I think you can see here, the IWM was leading for a while. This is a 5-year chart. Completely fell apart in 2015 into early 2016. Came roaring back in 2016 throughout that year. Then had another year off, 6 months up, and now it's been close to 18 months that we have been underperforming the SPDR. I think that could be changing. And I think the reason is, number one, we're breaking out of this consolidation of the market. The small caps have not been doing well during this consolidation, actually moving much lower than the S&P 500. But I think that's beginning to change. I think the fact that we are seeing our 10-year Treasury yield start to uptrend, I think that's saying good things about our domestic economy going forward. And of course, small caps, that's all they do. For the most part, they just do business in the U.S. So if the economy is starting to show signs, and that also is an indication that shows that would also be your transports, because we don't, truckers don't travel across the ocean, railroads don't travel across the ocean. So you've got two key areas of the transports that when they start moving, it's a good sign typically for small caps, because it's saying that our domestic economy is expected to strengthen. So what I would be watching here on this chart, and I'm going to annotate this for you, is watch this double top up here, because if we break out, you might say, well, I don't want to miss this move to the upside. And I actually like small caps right now for reasons I've already talked about. But if we do break out above this level, I think we could just start something that could be much longer term. It could be throughout 2020. So I think that we've got some opportunities here. But this is a group that has been downtrending. If it were to turn back down and break below this double bottom down here, then it would need to be reevaluated. I think we're consolidating, and I'm looking for a breakout, just like I'm looking for Treasury yields to go higher and looking for transports to rally as well. All right, let's see, what else do we have? Oh, I wanted to show you the article. So if you haven't gone into the articles at Stock Charts, or if you're not a subscriber to my blog and haven't been notified, you can go in and check this area anytime. I used to post every day at 9 a.m. and now that I do the daily market report for our EarningsBeats.com members, I honestly, I just don't have time to do it every single day. So I post now probably, I'm going to guess maybe 3 times a week in here to keep folks abreast of what I'm thinking. But today's article was specifically about December and the seasonality. So here are a couple of charts. Here's the small cap index, looking how it performs over the last 20 years. And you can see October, November, and December tend to be pretty good period. And it has been this quarter. We've been strong, and I think we're going to get stronger. Then I looked at the small cap index relative to the S&P 500. And to do that, all you do is you put in your SML, and then you compare it to the SPX. Click go, and then drag. It'll be a 5-year default. You drag this over 20 years. So what you normally would see is this bar over here. All you have to do is click on it and drag it. You take that over 20 years, and you can see over the last 2 decades, the outperformance, the average outperformance is 1.3 percentage points. That's a lot of outperformance on average in 1 month. Now, it only outperforms about 50% of the years, but clearly when it does, it must really outperform. And that's kind of exciting with this group just breaking out and showing this relative strength. Here's the IWM. So if you wanted to just look at an ETF over the last 20 years, you can see November, December, a couple of very strong months, actually all the way through about June. The tendency is for the IWM to perform pretty well. But I pointed out I don't just trade off of seasonal patterns. I want to make sure that I'm seeing things technically develop very bullishly, and I think this chart shows that. The IWM, you can see 7 different attempts to get through this 157.5 to 160 area, and then we finally do it. And you can see the volume surge on that, even though we're basically in a holiday week. Still saw the volume pick up pretty nicely to support this move. So I think the IWM looks really good as we head into December. And again, I own it. I plan to hold it as long as it looks good technically, at least through this month. But I may, hold on to a pretty good portion of it throughout 2020, depending on how it's performing relative to the S&P. If you follow me, one of my goals is to outperform the S&P 500. So I'm not going to really be a fan of small caps when they're in that downtrend. But now that they've got the double bottom, and I'm seeing other signs that are suggesting we're going to lead small caps, now getting a breakout, I think now's the time to take a shot on the group. All right, next up, earnings. Not really a whole lot of earnings to talk about. We got some more later in the week, but I just wanted to point out one that we'll be reporting, I believe, later today. It's either today or tomorrow after the market closes. So you have to go back and double check me on that. I think it might be tomorrow. I don't think there was anything of significance today. So I think it's tomorrow after the bell. Coupa Software reports. This company has gone up quite a bit. You can see a year ago, less than a year ago, the stock was trading at under $80. Now it's $153. So it's had a huge move, lots of volume, lots of volatility with the overall software group of late. And I think it's doing pretty well. We had a little bit of a rough patch back in October. You can see the relative weakness there, and that was when the earnings came out. Big volume, moved down, but we've seen a lot of software stocks recover. And now, actually, I said that's earnings. That's not earnings. Earnings were over here in September. This may have just been in sympathy with every other software stock that was going down back in mid-October. But Coupa has rebounded. They do report tomorrow afternoon. We'll see whether or not they can resume their relative strength. I mean, I like the stock, but it is very volatile. This is one that could go 10, 20% in either direction. All right, next up. Upgrades, downgrades. I want to start with Splunk. Splunk was upgraded today. Nice push to the upside. I think that looks really nice. Nice volume. Good relative strength, moving to about a 6-month high. I would agree with this upgrade. 1 second, please. All right, thanks for that. All right, so Splunk, I agree with that upgrade. I think this chart looks really nice. Talked about this last week, by the way, when it was making this big push on heavy volume. It continues to move higher, and I like it. Now, one I don't like, there was an upgrade on Treehouse Foods, THS. Do not like this one at all. I don't know why anyone would be upgrading the stock. Gap down back in May, gap down in August, gap down in November. These are just continuation gaps to the downside. The food processing group has been moving higher, and while it's been moving higher, Treehouse Foods has been moving lower. I'm not seeing anything here that I like. Look at the relative strength or weakness in this case. 52-week low. I guess maybe if you're a value investor, you might see something here to upgrade, but I'm not a value investor. I am a momentum trader, and I see nothing here, so I would not be interested. There were a few downgrades today, a few notable downgrades. One was Biogen. Biogen, I think, is sideways consolidating. I do not agree with this downtrend. I really like the biotechs. This may not be one of the best, but it did kind of get up off the floor about 6 weeks ago, and the volume trends have been pretty strong. I think if it pulls back, hits the 20-day, or if it goes below that, I think 275, 280 is really good support here. I don't really agree with the downgrade. I think Biogen goes higher in time. Roku downgraded today, and I believe this was by Morgan Stanley. It was getting close to a high, maybe a valuation. I think they mentioned that they believe next year Roku is going to begin seeing a slowdown in their growth rate. Not that they're going to be seeing a slowdown in earnings, just their growth rate. And as a result, they were downgrading it today. I like Roku. I think Roku goes higher. Could it consolidate for a while? Absolutely. The stock ran from $27 to $180 almost in 8 months. Of course, it could consolidate for a while. But I still like this company further out. I think the fact that Apple, Comcast, Disney, all of them getting into Roku space, I think that is just absolutely saying, hey, this is a great group to be in. Apple wouldn't be getting in. Disney wouldn't be getting in if there wasn't a whole lot of business to be had there. So I still like Roku as one of the leaders. All right, let's keep moving. A couple of Monday setups I just wanted to give you quickly. Let's see. Ring Central, RING, or no, it's RNG. Ring Central, big move up. I see kind of an equal highs, rising lows, good volume trends. Every time we get a big push to the upside, it's generally accompanied by some good volume. I think we're going to break out above this 180 level. So we're not quite there yet. I wouldn't be jumping in at this point, but it's one I would watch. It is one of the strongest stocks within the computer services area. Let's see, I'll give you another one or two here. How about, all right, here's one that's actually pulled back. So if you're more interested in stocks that have pulled back, you can see the stock was up to about 580 3 weeks ago, came all the way back down to 477. And you can see this is an area where this has been holding. So you got what looks like the start of an uptrend and sideways consolidation. Anything below 475, I would not be interested. So I keep a fairly tight stop, but it could be putting in another bottom here and going back up to challenge these recent highs. So I just liked it from a reward to risk standpoint. Let's see, VCEL, I think. Yeah, Vericel. I see a bull flag here. Beautiful move up. This is another one in the biotech space. Move up, sideways consolidation. Watch for a breakout above this 19.5, 20 level. I do like the biotechs, and this is one that could really begin to move if we take out those recent highs. One I'll point out for those of you maybe that want to be a little bit more defensive in the real estate area, CBRE, sideways consolidation and a breakout last week. Look at the volume pickup. That is what I refer to as a confirming breakout, or a confirmed breakout. And that just means that volume was heavier than normal to support it. I like to see the volume pick up when we get these breakouts. When you get a breakout on light volume, or maybe you get an intraday kind of a breakout, long tail, that's when you need to be a little careful for pullbacks. But when I get these big volume breakouts, I feel pretty good about the uptrend. I think the rising 20-day here on CBRE looks pretty strong. All right, now I've talked a lot about small caps. I just want to give you maybe a little heads up of a way or two to find individual small caps. IWM's a ETF. It's a great way to to trade the small caps if in fact they are going to be a leader. But if you wanted to be a little more riskier, what you can do is go in here to your dashboard and go under Member Tools and look for the Scooter reports, which are right here. Scooter reports are under the summary pages. And when you click on Scooter reports, there's a couple of things you can do here. First of all, I would go to the small cap stock, so change that from large cap to small cap. The other thing you can do is sort by these columns. So here are your best scooters, and look at all the biotechs. There's so many small medical companies, and these the scooter ranks are based really on what's happened over the last 5 months. Scooter scores are not based over the last 5 years. It's literally the last 5 months. So a lot of these biotechs have picked themselves up off the floor, and some of them are flying. And as a result, that's why you're seeing this the small cap scooters being littered by many of these biotechs and pharmas. One thing you can do to find some interesting plays, in my opinion, is to click on this change. And you can do this every day, but you just see some stocks that are showing large changes. And if they're showing pretty big changes and they still have maybe scooters around, like here, 58, it's down 11. So that means it was 69 before. So it might be pulling back and providing an opportunity. So this is in the medical supplies area, but let's take a look at Neogen to see what's going on. I don't know if I like this one. Did have a nice breakout, but that was a lot of volume on this gap down. We couldn't get through gap resistance, starting to roll back over. If I took a chance here, I would be thinking it's going to hold its moving averages. So I could keep a fairly tight stop. I don't want to go all the way back down here, $62, $63. I'd like to see this thing hold around $65.50 to $66. So that would be one, maybe to take a look at. Here's another one. This is an industrial supplier, Barnes Group. I like the industrials. See, now this one I think looks pretty good. You got a nice breakout here, taking out this downtrend. We actually moved to a 52-week high, pulled back, hit that 20-day, bounced, and then we came back down on light volume. I think the 20-day and maybe all the way down to about 56, 57 would be pretty good support on Barnes. So again, this is just using the stock charts tools. You don't have to run scans. I mean, you could absolutely run scans, but this is kind of scanning without running a scan. Stock charts puts all of these small caps in one area for you. You can just go on that, again, just sort it by the change in scooter, and then just go down and find some. I mean, you might look at, let's see, this is a steel stock. I don't know, maybe you like steel. Take a look. Well, it broke out, volume picked up, took out this high around 22. I would not want it to close back below 22, that price support area, and it may hold that rising 20-day and take back off. But again, just a quick idea on how you can find some of these charts, some of these small caps. All right, I am going to go into the 3 you must see. I always like to end the show with this. And the first one, these are all earnings, all companies coming up with earnings this week. And I just want to show you I'm not a fan of any of these heading into earnings, and I'm going to show you why. So here is Zscaler. Zscaler moving up, looking pretty good here lately, but it does have an earnings report. It's got overhead reaction high to this big gap down on massive volume. And when you look at the relative strength, I mean, it literally fell right out of bed about 3 or 4 months ago, starting to show a little bit of relative strength, but this big downtrend would really bother me. It's not one of the favored stocks right now in software. I would not hold this one into earnings. They could come through, and maybe the stock gaps up, it's up 20%, but it's not one that I personally would take a chance with. Another one that I'm not overly fascinated with is Workday. Workday is going to be reporting. Look at this big gap down, very heavy volume. We've made our way all the way back up to test the top of this gap resistance. Volume's been okay, not huge, but okay. But again, look at the relative strength. Last 6 months on Workday has been horrible. I just don't see it. I'm not liking this one, and personally, I would stay away from it. Last one, again in software, Salesforce.com. Now you look at it and you say, well, this one's not bad up near its 52-week high, but keep in mind software is broken out. So yeah, it's been doing a little bit better here of late, but it is still down close to a 52-week low. If Salesforce.com is getting ready to blow the doors off its earnings report, Wall Street hasn't been told because the money is not rotating in here, not on a relative basis. We've seen a lot of these software stocks really take back off to the upside. Salesforce, yes, it's done okay on its absolute chart, but it's still got a lot of work to do here. All right, so that's it for today. I do want to, again, mention to you Market Vision 2020. Let me go ahead and pull the website up. I don't know why my titles here across the top don't show, but if you go across here, here's a free newsletter, EarningsBeats Digest. Definitely sign up for that. Here's the Market Vision 2020, though. Click on that tab, brings you to this page, sign up. Really important, you're going to get the best prices. You're going to be eligible for giveaways. You're going to be eligible for the mini-series events that we have. We've got another handful coming up. I did one on Friday. You'll be eligible to go back and look at the recordings. This is really important. You want to make sure you sign up if you haven't already signed up, just to be eligible for all these things. All right, that is it. Everybody have a great new trading week, trading month. And hard to believe, but in a year, we'll be saying Happy New Year, 2020, right around the corner. Anyhow, everybody have a great day. See you on Wednesday here at EarningsBeats.com for Trading Places Live. Happy trading.